Hey guys, welcome back to a brand new video. Today we're going to talk about mitigation and how to use mitigation. What is mitigation? So without further ado, let's get on with the video. All right, so I feel like a lot of people have a problem understanding what mitigation is, and mitigation is one of those things where it's hard to understand what it may be. So I'm going to simplify it and break it down to you guys very easily to understand. All right, so why are banks and institutions trying to mitigate their position? Well, the reason why they're trying to mitigate their position or working to mitigate their position is because, they're in the markets to not lose money like anyone else, right? Everyone doesn't want to lose money, but they are good at it 100%, 100% of the time because they have areas of liquidity where they are able to put in like here and here, and then they're able to hold a lot of positions open. But eventually, the markets will always the banks and institutions will always win at the end of the day because they're always, in to make money. So in this scenario here, when banks are trying to reverse the market, say going back down, what they're really doing is trying to close their last position, to close their last buy, and to come back at a zero, or potentially make some profit, maybe here about the 50%, or maybe all the way a nice big retrace from about 90% of the way before markets close back down or go back down. So that's the big reason why they're mitigating. And essentially, if you're a retail trader, you can think of mitigation as just when the markets break a major structure, it's a break, right? And you can think of it as a break and retest, whatever, that's essentially, it's just breaking structure. That's what it is essentially. Just breaking major structure, the market's trying to come back to reverse essentially. Now, it doesn't necessarily mean that markets are going to be going all the way down after a first break of structure. It's just, this is what banks are made up to do, is mitigate their own positions. All right, so I feel like a lot of people have a problem understanding what mitigation is, and mitigation is one of those things where it's hard to understand what it may be. So I'm going to simplify it and break it down to you guys very easily to understand. So what mitigation is essentially this: when price is pushing up like this, right, and all of a sudden the banks or the institutions break below structure like this. Okay. And mitigation is all it is just price coming back to an area like this to mitigate a buy before the major move comes back down. Okay, and if that's a little confusing, I'm going to break it down a little bit. So what the banks are doing essentially is banks and retailers are both buying right here, buying and selling, right? And we consider this piece of information right here as the last buy that happened before this major move down happened when it broke structure. Okay, so what we're typically seeing here is that when the market is breaking structure like this, banks have to close their last buy position, which was right here. And the reason why they have to close it, the reason why they have to close it is because the banks have to go back up to mitigate their last buy, because now they're changing direction, or at least that's what it looks like here. That's what they're doing. So that's what mitigation is. Mitigation is really just an area where the banks are trying to close their last buy position because they're changing the direction like this. So when the markets are going up like this, okay, and all of a sudden there's this huge break like this that happens, what retail traders do most of the time, most of the time, at least the smart ones, would always put stop loss right below their buying position, okay? Because if they see a trend like this, the markets are obviously bullish. You're going to be looking for buys here, okay? But in this case, banks and institutions don't have stop losses like this, okay? All they're doing is they're putting sell positions, they're buying and buy positions, sell positions, buy positions. That's what they're doing here, okay? So they don't have any stop losses, but eventually when the markets reverse like this, banks, institutions are able to start liquidating on the money that you have put stop losses on. That's the only way banks and institutions move the market, is taking out your liquidity from the upside or the downside, just like this, right? So if you guys ever think about, why the markets move the way they are, like this, for example, and why markets are breaking below structure and all of a sudden the markets push up and you're like, well, what happened down here? Like, I was taught a break and a retest or a break and a retracement to take the buy, right? Well, this is essentially what's called a liquidity grab in the market, okay? Markets are grabbing liquidity, or the banks and institutions are grabbing more money, your stop losses, to take prices back up further, or may just come back up to mitigate, about 90% or 50% or 20 or 30%, right down here to push the markets all the way back down. All right, so I'm going to show you guys some examples of how to use mitigation correctly in these charts here. So let's go back all the way here and some of the replay, and I'll show you guys. All right, so as you can see here, there are clear breaks of structure that are happening right here. Okay, and when you're looking for a trend, obviously, you're always looking for a break. That's the number one thing, right? And what you need to be doing as a trader is to identify now your mitigation areas. Mitigation areas, for me, I consider to be the last up candle before the major trend down, or if it's too busy for you to find where that last mitigation is, you can always select a few. So for example, here is an area where the markets have never tested this break of structure. So there's a break here, but it never tested this order block here. So that's how I identify what mitigation looks like or is potentially. There's also another potential mitigation area right here, because as you see, when price broke this line right here, our structure, the markets never came back to test this level right up here. So now these are two areas of interest for me, and that's how I can identify where the mitigation levels are. If it's too confusing for you to find out which one it is, which last up candle it may be, just highlight both and then wait for the market to get up to that area and then let it hit. And then you're going to go down to the 1 hour to look for the change of direction, of course. So let's play this out and we'll see what happens here. Okay, so as you can see here, the market is pushing low. Okay, it touched the order block right here, this mitigation area. And look what happened down here. Look how price broke structure here. Okay, it broke structure here, and look how far it went up to mitigate its last position before taking the sell back down now, because markets are looking to change direction in this level. So let's go play it and you'll see what happens. Okay, so as you can see here, the markets broke another structure right here. They broke once and twice right here. So the banks and institutions are obviously changing direction based off mitigation. You see the pullback that happened here, they mitigated about 90% of the way. And you can see this level here, there's about 50% of the way where people or retailers who saw this try to sell the 50% because they saw this break happen here. All right. And then you can also see the 30%, but the 30% hasn't happened here yet, obviously. This would actually be probably the 10% or something here, but this is the 30% right here where people have tried to sell as well. So obviously, we would have taken a sell up here at this mitigation level. We see another break. Now we have to see another area of mitigation on a lower time frame. Look at this over here. What do I see here? There's another area of unmitigated area right there. And look what happens. Look where the banks and institutions do. They come back all the way up to mitigate this last buy that has caused this huge this break of structure, and they mitigated it to take price even lower, like this. Okay. So as you see here, if we were here at the time, we could look for sells, take a sell, and hit our targets right here and finish right here. Okay, so this is how you identify the mitigation areas. Let's go back on the daily time frame to show you guys another example here. Okay, so let's go down. We're looking for a solid break of structure here for another potential sell. Okay, right here. We have a nice solid break of structure. Now, where's the last unmitigated area? It's right here, right? You see how this was the last up candle and all of a sudden this huge break of structure happened? So this is one unmitigated area right here. And so far we can see, if you zoom in here, you can see that this was another up candle before this major trend was broken. And look what's happening in this area right now. The market is trying to mitigate this position here before taking price down. Now, we don't know at this time whether price is going to push down. We just see in hindsight right now that this is a potential position for markets to start pushing down based off of the mitigation. So I can look at this area here right now, and then go down on the lower time frame now to see if we can look for potential sells. Let me delete this here. Oops, delete this right here. All right, and now what we're looking for here now, obviously, is for a break of structure. As you see, there's two types of break of structures that's going bullish. In order for us to sell, we need the markets to break this form of structure here, at least twice. Now, and look at that. Oh, okay, so it broke, but it only broke with a wick, which means the markets have closed up here, which means price is bullish at this time. So we're not going to be looking to sell just yet. Okay, we're looking for structure to be broken here. Okay, price hasn't broken yet, which means price is still bullish here, obviously. So it's probably going up to this order block here to mitigate, and then we're going to look for the market to switch here. All right, so let's keep playing it here so I can show you. All right, there we go. Price tested this order block here. Let me delete all this noise, guys, so that way you guys can focus on one order block, not both of them. Right here, right here. Oops. All right. So once we had this test of this major order block here that we've highlighted, we're still going to look for the market to break structure. And it has to break the downside structure right here. So let's look at this. Okay, price broke the structure, right? Now what we want to do is we want the market to mitigate. Where's the last candle where the markets haven't mitigated? Well, you can see here clearly. Here's one, right? This is how I identify a mitigation, guys. So here's one area, right? So we're looking for a potential sell here, right here. And see how price gets right to the T, right to the pip, to this area, unmitigated area. You could have had your risk to reward tool like this set ready, and then for your TP to have to come all the way down here, okay? So this is how you mitigate, right? So watch this. Once price breaks another structure, what are we looking for here? We're looking for price to mitigate again. And where's that last mitigation order block? It's right here. Okay, this is it right here, this last up candle before this break happened. That's our mitigation area, because this is an area the market hasn't tested yet. So let's go for it. Oh, okay, there we go. Actually, to tell you the truth, guys, this is one of them, and I should have been telling you about this. And here's another one with the wick right here. And I'll explain why this is another unmitigated area. And the reason for that is because there was an up move that happened here, an up candle that happened before this major move happened down here. So if you guys understand your wicks and your bodies, this is why these wicks are important, to understand that whenever there's a long wick like this that happens, oops, forgive me, guys. When there's a long wick that happens like this, there was an area, an up candle, or a little uptrend that happened here, probably on the 5 minute or 1 minute down here. And then price broke all the way down. So this is another area of unmitigated area. So this would be one, and then this would be two right here. And as you can see here, this area was mitigated now by the banks, and then price kept going lower. Let's see another one. Here's another break. So you could have had multiple trades, by the way, like this. And this is what I do most of the time. So once I set these ones, I see another break here. We have yet another unmitigated area, this big blue one right here, this big blue candle right here, or there's another one right here, this long wick right here, which price may be mitigating. Let's take another sell. Look at that. As you see, look what happened. Let me stretch this area right here. Oh, just about. Okay, and sometimes sometimes it stays unmitigated, which is totally fine. And eventually, if when markets change direction, they're going to be mitigating all these positions that were left unmitigated. So if the price keeps moving down, and then all of a sudden they start pushing up, well, now they mitigated all this, and then the rest is that, really. So let's look at another one. Right here we have another break of structure. Okay, you guys tell me where the next mitigation unmitigated area is. Okay, it's very easy. It's this one right here, right? So we're going to wait for this area to get mitigated, right there. You see how it's mitigating? Now, what we're looking for obviously is for the market to change direction, so we don't just start selling here, okay? Because sometimes a lot of people just start selling like this. Oops, start selling like this when it taps their order block in unmitigated area, and then of course, what do you know? Price just goes against them, and you know, and they're wondering why did it take me out? So that's how you find unmitigated areas, guys. Let's go back on the daily just to kind of show you another example, some examples here, and so you guys can get used to the understanding of unmitigated areas and mitigated areas. All right, so as you can see here, we have almost another break. I wouldn't quite consider this a break because the wick is there and the body's here. I need a solid break, solid body break first before I look for any sells. Actually, this is an unmitigated area here, to be honest. Look right here. Here's an order block right here. Price moved down so aggressively, it never mitigated at all. Actually, I'm sorry, it did mitigate a little bit here. Now that I see it here, it did mitigate. In this case, price may actually start moving up now that this area was mitigated now. So in this case, we're still in a downtrend. That doesn't mean that you should be counter trend trading when we're in a downtrend. Just look for the areas to start breaking structure like this. All right, so we have almost a solid break of structure. Let's go down. Okay, we broke structure. Now look at this last up candle before the down move. That's an area where the price needs to mitigate, right? And if we understood too, these wicks here, these big wicks right here, are also areas of unmitigated areas right here, because this is actually where the last up move happened before a major move happened, before a major move to the downside happened. This one, oops, see this one, and then this one down here. Let me show you guys right here, right there. So there's two of them. All you got to do is set them up on the higher time frame, the unmitigated areas on the higher time frame. You just go in the lower time frame to look to see to change direction, and then you take the sell. So let's see here. We had another break. Okay, here's another break. Oh, we have a double bottom. So we'll see if we're looking for a price to break. There we go. All right, we have another break of structure here. Let's look for the unmitigated areas. Here's one right there. And then here is another one right here. This little cross right here. These are both valid unmitigated areas. So obviously, you know, you would wait till for the market to come out to an unmitigated area and to tap it, and then to look for the sells. Let's see what happens here. Yep, there you go. Okay, and you would have hit your TP. All right, same thing goes for this, like this. Unmitigated areas right here. Okay, we're going to wait patiently for that market to get there. Boom, tap this in, and you can look for sells, obviously, on the 1 hour here. Wait for the market to change direction. You can see it's bullish on the lower time frame now. We're looking for market to come here, potentially mitigate these sells here, the sells that the market's happen, and it may push up for a double top. Let's see what happens. All right, see, look at that. Okay, it's coming here. All right, price is pushing up. There we go. You could have taken a nice, beautiful buy here because we understood on the lower time frame, since it's bullish here still, and this was our last down candle before the major move up. This was the only order block that we see that needed to be mitigated. And then this is where the buys would have happened, and your TP would have been up here. But let's look at now on the higher time perspective. We obviously broke structure. Now let's wait for the market to break this the structure before we start looking for sells. Okay, price is bullish still here. Okay, here's our last up candle before the major move up. Okay, right here. It's actually right here, to be honest, right around here. All right. See how it just mitigated, but it crushed right through it. So in reality, you wouldn't have been taking any sells because, you know, the markets have broken below our mitigation block. So now what price is indicating here is a potential sell. Because look at this. Now we have a change of direction. We've broken structure. The banks and retailers have bought all the way here. This was the last buy right here that the banks and institutions have made. So now we're looking for markets to mitigate either at this level here, right here where this last up candle is, or it could be this one right here too. Although I feel like, let me see if this is mitigated. Yeah, this is mitigated. So it may not come up here, but with this wick standing here, this may be an option for a mitigated area. So let's see what happens here, guys. We have markets coming down, and look at that. As you know, look what happened. Like no guessing anymore, right? This is an area, my first interest. This is my second interest right here of what I'm looking at, what I'd be looking for a sell. And knowing that our daily time frame is on a downtrend, we also know that on the 1 hour has to be on a downtrend. It has to correlate with the daily time frame. So there we go. We had another break, right? Come back up all the way up to another unmitigated block right here. Let me use this properly here, show you guys. Should be the last example here, right here. Okay, and we had also another area, I believe. No, it's been mitigated. Okay, so this is the only one right here. Okay, price is coming up. All right, it's over mitigating. In fact, this would have been it. Yeah, I was actually thinking this is also another one because price didn't really touch. It touched slightly with this wick over here, but this is still a possibility that this would have been a mitigated area. Anywho, so we had two options, right? 1 and 2. And then you look for the sell, right? And done. What we're doing here, the unmitigated areas, what you're doing here actually is you're catching the extension of all this noise that you see here, right? When you were taught as a retail trader, you were taught for a break and a retest, right? Look at all these people here that try to sell at a break and a retest. People try to sell here, and price took them out and went all the way back to mitigate at these blocks. So just remember what I was teaching you guys from the very beginning, that a mitigation area is when markets are going up like this, and then the market breaks structure like this. All it is, you're looking for the unmitigated areas inside. They're the unmitigated blocks like this, okay? And one of them is bound to work, okay? And then you're just gonna have to go on the lower time frame to obviously see the change of direction, because your higher time frame is now a downtrend, or at least it's breaking structure. And then you're going to go in scope and see if the lower time frames are reversing, and then you can take charge of that. So that's all it is. Just remember, it's just mitigation order blocks that need to be mitigated, and that's it. Thanks guys for watching, and I hope you guys really enjoyed this video. If you have comments or questions or concerns, please hit me up. Let me know. I'd be happy to hear from you guys. Until then, I'll see you guys in the next video.